Most traders believe trading is about action, finding opportunities, taking trades, being involved. That belief alone explains why most traders underperform. Because markets don't reward activity, they reward alignment. Here's what alignment looks like. Notice the clear trend, consistent volatility, and how the price respects key structural levels. This is a high-probability environment, and alignment isn't always available. Doing nothing isn't avoidance. It's selectivity. Modern trading conditions push you toward action. Screens are always on. Markets are always moving. Social media is always reacting. Contrast that with a noisy market. See the erratic price swings, the lack of a clear trend, and the conflicting signals. Trading here is like navigating a storm without a compass. This creates a dangerous illusion that if price is moving, something must be done. But movement is not opportunity. Most price movement is noise, random fluctuations inside unclear conditions. Trading during noise doesn't build an edge. It degrades one. Professionals understand this early. Retail traders learn it late, usually through losses. There are market environments where liquidity is fragmented, volatility is erratic, correlations break down, headlines override structure. So how do you apply this? First, define your ideal trading conditions. What does an aligned market look like for your strategy? Write it down. Second, use a checklist before every trade. Is the market aligned with your predefined conditions? If not, you do nothing. Third, review your trades weekly. How many trades were taken in non-ideal conditions? The goal is to reduce that number over time. In these conditions, probability compresses. Edges that normally work stop expressing themselves. Signals conflict. Backtests become irrelevant. This is when most traders lose money. Not because they're wrong, but because they force decisions when clarity doesn't exist. Professionals don't call these bad markets. They call them untradeable markets. And they step aside. Here's something most people don't want to hear. The trades that damage accounts the most are rarely the obvious mistakes. They're the small, unnecessary trades taken, out of boredom, out of frustration, out of the need to feel involved. Each trade seems harmless, but cumulatively, they increase emotional exposure, reduce patience, degrade confidence. By the time a real opportunity appears, the trader is already compromised. This is why restraint is not passive. It's protective. Institutional traders don't measure productivity by trade count. They measure it by capital preservation, decision quality, readiness. Being flat is not an activity. It's a deliberate decision to avoid unfavorable conditions, preserve mental capital, wait for asymmetry. Capital that isn't deployed recklessly retains optionality. Optionality is leverage. It allows you to act decisively later without emotional baggage. Doing nothing feels uncomfortable. Not because it's wrong, but because it removes stimulation. Most traders confuse stimulation with progress. Screens moving, orders filling, positions open. That activity creates dopamine. Restraint creates silence. Silence exposes impatience. Silence exposes ego. Silence exposes insecurity. That's why doing nothing is hard. It forces you to confront the idea that your value as a trader does not come from constant action. From the outside, disciplined traders look slow. They don't trade every day. They don't comment on every move. They don't react to every headline. But they're not slow. They're selective. They understand that opportunity clusters, edges appear episodically. Patience is what allows exploitation. Most profits come from a small number of decisions, not continuous participation. The rest of the time is preparation and waiting. Edges decay when overused. They decay faster when applied in the wrong environment. Doing nothing protects capital confidence, discipline. It prevents you from forcing trades, increasing size, emotionally trading to feel productive. The reward for this discipline isn't just profit, it's freedom. As a profitable nomad, you're not tied to a desk or a screen. This is why restraint often outperforms activity. Not trading is often a better decision than trading poorly. Most traders struggle to distinguish between uncertainty, opportunity. Uncertainty feels uncomfortable. Opportunity feels obvious in hindsight. Professionals wait for conditions where risk is definable, reward is asymmetric, probability expands. If those conditions aren't present, they don't negotiate with the market. They wait. Waiting is not hesitation. It's discipline. Restraint must be trained. It requires clear rules, predefined environments, acceptance that not every day is a trading day. Most traders never develop this skill because they mistake patience for weakness. In reality, patience is control. And control is what keeps traders alive long enough for probabilities to work. Being a profitable nomad isn't about constant movement. It's about capital that buys patience, patience that creates freedom, freedom that allows selectivity. Whether in trading, business, or life, doing nothing at the right time is leverage. The ability to wait is the ability to survive. If this resonates, you're not looking for signals. You're looking for frameworks that survive uncertainty. Inside Profitable Nomads, this is baseline thinking. Risk first, restraint over reaction, patience as strategy. It's invite-only, built for people who understand that sometimes the most profitable move is knowing when not to move at all.